Hello and welcome back to another video on cash and internal controls. In this video, we're going to talk about a bank reconciliation statement. This is slightly more involved than the previous one. In this one, we're going to try and figure out some numbers that are not given to us directly. It's fairly simple once you learn how to set up the information. So with that, let's look at the exercise on hand. We have Perth Company's bank statement from Main Street Bank at August 31st, 2022. We've been given the information, we'll get to this. And then we've been given the information about the company's cash account. So let me start out by setting up the bank reconciliation statement. And what I mean by that is just set up the skeletal portion, starting with the name of the company, Perth Inc. Second line, I'll write bank reconciliation statement. Third line, I'll write the date as of which I'm preparing this. This is a standard header. My presentation format is I have two sides to the page for the bank reconciliation statement. It looks like a T account. It's not a T account. It's simply my presentation style. So on this side, I have balance as per books and all adjustments that are needed here. And on this side, I have balance as per bank and all adjustments that are needed here. So let's read the problem and see what we have. They tell us on March 31st, on March 1st, the balance is 18,400. I'm not interested in that number. I look to the whole problem over here, the bank statement, and they tell me on August 31st, my balance is 20,692. That's the number I need over here. So I place that information over there. Now, from the bank statement, any bank, the credit memos and debit memos are basically information telling me the bank has taken care of these transactions, which means they've either added to my account or subtracted from my account. I need to update it. So let's take a look at what we have. Bank credit memo is interest earned, which means they have added money to my account, $45. So let me do the same over here. On our side, I'm going to write add, and it is interest earned. The interest earned is $45. I'm going to write $45 over here. Then I have the debit memos. I have two of them. The bank has taken out $25 from my account for a safety deposit box that I have. So I need to do that again on my side. Less, I'm going to write safety deposit box, and it's a subtraction. So put the number in parentheses to remember that we need to subtract that number. $25. Service charge, they're charging me a monthly fee, or perhaps for something else, $50. They're not informing me, they're just informing me they've already done it. When it's in the bank statement, it's already happened, which means I need to update my books. So I have one credit memo and two debit memos that I have taken care of over here. So from the bank statement, I have the necessary information in the bank's reconciliation statement. Now let's continue reading the exercise. A summary of the cash account in the ledger for August shows the following. My opening balance is 18,700. We have receipts of 74,000, disbursements of 73,570, leaving me with a balance of 19,130. Now that's the number I need over here, that 19,130. Now I'm going to go ahead and do, this is just my notes on the side. I'm opening a T account for cash for the month of August. I say over here my opening balance was 18,700. I collected a total of 74,000. Those are my cash receipts. I have disbursements. I made payments of 73,570. So when I put this information in, I'm coming up with a balance of 19,130, which is the number they have given me. Okay. Now this is for my books. I could have mistakes, and this is my opportunity to check if there are any mistakes. An analysis reveals that the only reconciling item on the July 31st bank reconciliation, we are in August, which means this was last month's bank reconciliation, is that we have $4,800 deposits in transit and checks outstanding are 4,500. This is from last month. I've not been given information for the current month, and that's the number I need to work out. I also have learned now that there was an error involving a company check drawn in August. I have written out a check. A check for $400 to a creditor on account has cleared the bank in August, but was journalized and posted for $40. So it's a $400 check. I wrote the check for the correct amount. I made it in payment. The account has been settled, but my journal entry was only for $40. So my journal entry was accounts payable debit, cash credit for $40 instead of $400. So my cash account needs to be decreased by an additional $360. That's 40 minus 400. So I'm putting it under the less, and I will say this is an error correction. When we do our adjusting entries, I'll explain how we will work this out. This still doesn't give me this information that I need on this side. I need my deposits in transit and checks outstanding for the current month. So for that, I'll have some notes here on the side that I'm going to explain what I have. I have my cash. I have two columns over here. I have the receipts and I have the disbursements. So in the month of August, and from the T account, I say I have cash receipts of 74,000, cash disbursements of 73,570. Now, if I got the money from last month, 4,800 was owed to me last month. There was deposits and it was not owed to me. Monies that I had collected but not cleared the bank, 4,800. If it cleared the bank, all of it, this is how much should be deposits that I should have in the bank for the current month. Along those same lines, I had 4,500 in outstanding checks last month. So if all of those cleared, so again, if all my cash receipts from the current month and all the deposits outstanding from the previous month all came through, this is how much should have cleared the bank, 78,800. What have they told me over here? In the month of August, 71,000 has cleared the bank. So what has not yet cleared the bank? 7,800. Now I don't know whether it's 4,800 from last month plus 3 from this month, or I don't know what the combination is. But what I know is I have 7,800 now that is deposits in transit. So that's the number I'm going to put over here, 7,800. For the disbursements, if everything, all the checks that I wrote out in the current month and whatever was outstanding last month, if all of those had cleared, the bank should say what has cleared the account is 78,070. But what did they say has cleared? They have said 68,678 has cleared. So how much has not yet cleared the bank? 93,92 has not yet cleared the bank. And that's a number I'm going to put over here as not yet cleared the bank. At this point, I've taken all the information and placed it in the appropriate sections in the bank reconciliation statement. Assuming I've done this correctly, I should arrive at the adjusted cash balance. Let me change the color here. I should arrive at the adjusted cash balance. On both sides, I should have the same number. Okay, so add up all the information over here on this side. And when we do that, we arrive at 18,740. Do the same thing on this side. You add up all the information, and what you should arrive at over here should be the same number, 18,740. Only then you know that you have the correct answer. Your bank reconciliation is complete. So in this case, in this exercise, unlike the previous video, in the previous one, you were told what the deposits in transit were and checks outstanding. Here we had to figure these out, which is why I set up the T account and I set up my notes over here to arrive at these numbers. These are just my working notes. This is the official document I have here, bank reconciliation statement. Now, the bank statement, my books say that I have 19,130 in the bank, but this is the correct number I should have. That's the adjusted cash balance, that's the true cash balance. So I need to have a decrease in order to arrive at this number. We do that by way of journal entries because I can't just put this number in the balance sheet. I need to explain how I made the change, and that happens only by way of journal entries. All of these are going to happen on August 31st, 2022. I'm going to do my journal entry. Okay, so for the first one, it's fairly easy. It's cash debit, and the amount is $45. What should be credit? I have earned interest. So that is interest revenue credit. Now for all of these, cash is going to be credit. For these three that are minus. So each one of these, let's go through and see what we should do. So for this one, we do them separately. Okay. So we're going to have, we'll do each of these individually. So we have here bank service charge for these two amounts together. These two, we can put them together or we can list them separately. I'll combine them and say this is $75. These two numbers have been combined for bank service charge expense, $75. This error correction is $360. I know cash has to be credited. What account had to be credited? Remember, I made a payment in full. So for that one, I will debit accounts payable. So once I post these journal entries, the adjusting entries in my books, into my T accounts, the correct cash balance of 18,740 will appear at the end of August, and that's the number I take into my balance sheet on this date. Once again, this is not a very complicated problem. However, we did have to work out two numbers that were not given to us in this exercise. That's what makes this exercise a little slightly more complicated than the previous video. Do watch the next video where I take care of cash budgets. That's another internal control measure that companies have, where if you don't plan for how you're going to spend the money that you should collect, you will have no control over your cash. So bank reconciliation is done at the end of each period. Cash budgets are done at the beginning of each period or in prior periods. So these are all various internal control measures that companies will try and exercise to have a good handle of their cash. Thank you.